All right. Hello, everyone. Welcome back to Crypto Warehouse. My name's Brogan, and today I am with KB.
Hello, mate. You all right?
Yeah, I'm all right. Hopefully, you've been all right as well. So if you don't know what's going on in today's stream, we are going to do an interview, if you will. I suppose it is an interview. We'll go over, his methods, the market itself to apply his methods, and a bit about KB himself. Because, if you're someone who's watched the channel, quite consistently, or if you've been in Telegram, you probably will know, KB posts his charts and he talks about the charts in the chat as well. And you might see it and you might think, I actually have no idea what he's talking about. I have no idea what any of this means. Well, today, the aim of today is to try and solve that, try and give some explanation to his methods. And obviously, I don't expect him to give away his entire source, but if he wants to and was to be so kind, then obviously he will. So I think I actually have nothing to dilly-dally. I don't know if KB has anything to say in the intro, and if you want to say welcome or whatever.
Yeah, welcome. Thanks for having me. This is the first time I've been live, so it's kind of interesting.
Right.
Yeah, I'm more active in the Telegram and that, and I know I post charts quite a lot and give my analysis. So yeah, it'd be good to actually give a further, like how the concept works through the stream. So.
Exactly. Again, I want to thank you for being here as well. I do appreciate you coming on and talking, because there's a lot of people out there who probably post charts. I think there's some other people in Telegram who do post charts. I don't know if they're active right now. They're as active of late, but it's a big thing to come on and just talk about it for an hour or whatever, just off your own back. So I do really appreciate you coming here, and I think people watching this, whether it be live or retrospectively, will really appreciate you coming on. So I do again want to say thank you for that. But again, like I said, I don't have anything else to say. I think we should just get into this. We've kept people waiting long enough. So I think I should probably go over the topics. The first topic, we have 4 topics. First one is introduction, so a bit about KB, how long he's been training for, and some information about him. We've got technical questions, so the actual, core of the method, and a bit about that. Market questions, so applying this to the current, day, now, whatever you want to say, to Bitcoin, and seeing how it works, and then some takeaways. So if you want some final notes and just to give people some information they should take away from the stream, that is the area. So first topic, introductory questions. First one, can you tell us a little bit about yourself, KB?
Yeah, I'm a Bitcoin trader, mainly trade Bitcoin. I'm based in the south of the UK. I have a background in journalism, where I covered live events down to stuff like London Literature Festival up in London. My first encounter with Bitcoin was like many. I got told by a friend who was mining it on his laptop, and I chose not to listen, didn't think much of it. And it wasn't until the media group that I was part of doing the journalism started discussing it that I decided to look into it. And from there, it's like going down a rabbit hole. I wanted to learn more and more. And this was back in probably around 2017, just before the 20k bull run, when Bitcoin was around $4,000, $5,000. So I started buying as much as I possibly could the more I learned about it. But again, I wasn't just buying Bitcoin like many. I was delving into other different coins. I think one of them was heavily promoted in the UK, Electronium. I think even Harry Redknapp promoted it.
Right.
And so I brought heavily into that, swapping my Bitcoin for some of that, making that mistake. But yeah, it wasn't until we had the blow off top around 20k in 2017 that I started to look into leverage trading, because it was being heavily promoted on YouTube, on social media. And even though it was promoted beforehand, I didn't really take much notice. It seemed too complex for me. I was happy just to buy spot and just hold until whenever I was happy to sell.
100%.
So it wasn't until 2017 that I was seeing loads of people post their P&L making stupid amounts of money. And a few of the people that I was following and that I had gotten to know was also doing the same thing. So I didn't go immediately into it. I started learning as much as I could. But yeah, I made a lot of mistakes like many people did when they first entered leverage trading, thinking that they can go in there and make millions straight away.
Yeah, 100%.
So you do, it's like you will lose a lot of money doing that if you don't want to put the time and effort into actually learning how the market works.
Exactly. I think a lot of people are very eager to get into it and do it a bit too early. Maybe they're not fully prepared and then end up losing. And I think a lot of people then fall off from trading in general, calling it, you know, a sham or whatever, if they can't get it immediately.
I'm in a couple of Telegram groups at the moment, and unfortunately, one of the groups that I'm in, there's a lad that I saw him since he first joined the group, tried to start trading, and unfortunately, he was given bad information, you know, about using trading bots, and I don't agree with them at all.
No.
And it's gotten to the point now where I think around 76k, between 73 and 76k, he posted the other day that his whole portfolio is going to be liquidated because he don't understand the full, you know. And this isn't on Bitcoin, this is on Ethereum. And mind you, I have posted charts in their group to try and, you know, and I've spoken to the lad to try and give him
some advice.
I'm not saying follow what I say, but I'm just saying this is what my outlook on the market. Do what you want with it. And but yeah, unfortunately, he posted the other day that he's going to be out if he gets liquidated. That's him leaving crypto now.
Wow.
And
what price
unfortunately,
that
happens
was?
to a lot of people. That's between, I think he said 73k.
Wow. So I mean, again, you know, in the markets, obviously we're jumping ahead to the markets, but a lot of people think around 72k. I know yourself as well thinks 72k is one of the low points we'll see for Bitcoin. So that's very achievable for him, or obviously on the negative side of things and losing his whole portfolio. But that's quite a really, like, that's quite close to what we could potentially see. And he's going to lose it all, you say?
Well, it just shows you that's most of the people, and it was, don't get me wrong, it was me myself. Like I've liquidated a few accounts in the past, but unfortunately the people that come into this space don't fully understand risk management. So therefore they think the higher the more leverage they use, the more money they can make without actually understanding that the more money they can lose.
The faster you can lose it, 100%.
Yeah.
Right, yeah. So safe to say you're very, you know, versed in crypto, you know, not only just in trading, but being in the community, you know, as a whole. So my next question is, how long you've been specifically trading for, you know, doing charts, technical analysis? How long is that sphere of your self been?
Well, you've got my Discord name now, so you'll probably be able to find me on Twitter.
Right.
But so you'll be able to see
the history.
I've posted charts. Yeah. I'm not that active on there anymore. I'm more active in the Telegrams and that. But again, when it came to, I wasn't really looking at the charts that much when it was spot trading. And as I said, when it got into around, it was more in like when we had the lockdown around 2019, 2020, that I started to actually put my main focus on learning the markets, price action, like trying to find my edge, basically. Joining paid groups. I'd done everything and anything to basically consume as much information as I could. I wasn't looking for signals or anyone to tell me when to go long, go short. I basically wanted to get their knowledge, and so I can then build my edge upon that.
Exactly, you know, consume it all and then filter it how you want and then make your own way.
Exactly.
Yeah, 100%. I think a lot of even today's methods is building on, you know, shoulders of other people and kind of a lot of, you know, obfuscating other people's methodology. Not saying it's completely ripping them, but taking components of little areas you find and then building your own method of it. Yeah.
And I totally agree. And there's so many great resources of material that's out there, but unfortunately the algorithm on YouTube, you know, if you type in Bitcoin, it's not going to show them. You actually have to look. And the majority of the resources that I find helpful and some of the traders that I could recommend and so forth actually are on Twitter, and they do have YouTube channels, but again, it's very hard to find unless you're actually
100%.
looking for them specifically.
Yeah, 100% agree. I mean, a lot of the videos I've watched, which relates to, you know, Power Free, which is obviously my area, the channels have like, you know, 1,000 subscribers or 6,000 subscribers. Obviously, very similar to Crypto Warehouse. Obviously, if you're new here, so subscribing. But yeah, it's very hard. I think there's a very big pitfall with YouTube, which is it's very hard to get into the top area where you will be suggested to a lot of people. It's very hard to break that barrier. You know, the barrier to entry is really large. So a lot of people which have a lot of valuable information just will never see the light of day from a lot of people, which is obviously, you know, really, really sad. But
And unfortunately, I don't want to go to start stating names, but unfortunately, some of the YouTube channels out there, they aren't there to help you, in my opinion. They ain't there to give you any sort of advice or knowledge. I mean, they may do the occasional, this is how you use Bybit exchange for leverage trading. You know, they may give you a little guide, but it's mainly about their affiliates. It's getting as much people as they can to sign up.
Yeah, it's very surface level, very basic, and a lot of that is there's a lot of channels out there. Obviously, for my comment, I can talk about TikTok. There's a lot of them on TikTok, and I think this is one of the most toxic areas as well. Is I've talked about some of my streams as well. Is people who heavily promote trading meme coins and fail to mention the liquidity side of things and not actually being able to sell your tokens for, you know, $3 million, whatever they advertise. And I think a lot of them are very aggressive with their kind of advertisements for their benefit and don't actually give you the full story. So there's a lot there's a lot of big people which get in the way of the smaller people who actually give good information, which only benefit themselves when they give their information, doesn't benefit anyone else. So yeah, I completely agree with you. I know you kind of answered this in your first answer for a little bit about yourself, but what got you into trading? Obviously, this being, you know, the charts and leverage trading.
Again, I was interested in Bitcoin. From like since I started buying spot. What got me into the actual trading side of it was basically after we started retracing from 20k. I didn't understand what was happening. In my honest opinion, like many people when they're in this market around that top, you know, they probably didn't understand why suddenly we were crashing nearly 70%. But so it really got me thinking, you know, my portfolio was quite down. I wanted to learn where this could stop, you know, where, like, what's a good place to buy, like why had the market chosen to go that direction, you know, and so forth. So again, I tried to learn as much as I can. I stuck as many indicators as I can on my chart to try and tell me what was going on. That doesn't help. It took me a year or so to figure that out, unfortunately. Don't get me wrong, there are indicators that are helpful. I know plenty of traders that use the relative strength index, they use EMAs, and they make a lot of money. But it's the only reason they make that money is because they're being very disciplined on the trades that they take.
100%, 100% agree.
They're not trying to follow every single, you know, pump or dump or like that, but they have specific points in the market in which they would want to trade at. So again, I don't use indicators. I mean, when you see my screen, I do have an indicator which colors the candles, but this is just,
but it's not like
so it shows.
It's not like a data indicator which repaints and
no, it's nothing to do. The people have asked me before, is it anything to do with volume? It's nothing to do with volume. It just simply marks out liquidity gap candles.
Right, like big movement candles, like displacement type ones.
Yes.
Right. Okay.
Fair value gaps, voids.
Yeah, completely agree. Yeah, like for example, with me, like, you know, my chart, I don't have anything now. I don't. I had a period of time where I'm not saying certain indicators. You know, like you said, there's people who make tons of money trading those certain types of indicators, which, you know, can be influenced quite easily by certain movements, whether that be true price action or not. And the kind of task you need to solve yourself is how to be disciplined with them and use them appropriately. Obviously, I don't do that anymore. I had a dark period where I did a lot of that, which I think everyone goes through. You know, I think there's a very straight path from a lot of traders. Not saying every trader does this, but where a lot of, you know, there's a big period of time, probably near the start of someone's trading journey, where they do put a lot of indicators on their screen and max it out to 5, whatever you can do on TradingView, and try and consume all this data. And obviously, personally,
I think a lot of people, I think that happens to a lot of retail that join any crypto. You know, I think that's the first thing they do, and unfortunately, it's heavily promoted instead of actually learning price action and market structure. Yeah,
if you go to Crypto Trading Strategy on YouTube, I can almost guarantee within the first video you'll see an EMA crossover, and they'll be like, okay, EMA crossover, simple as that. When it crosses over, you buy or sell, and it's just not that simple. And if it was that simple, you know, the market would correct itself, and you just wouldn't make that much money. Like, there's no reward without there being some sort of like exclusivity to it. You know, not everyone could just put an EMA on their screen and immediately start making money, because it's just not possible. But no, yeah, I completely agree. I've been there. A lot of people have been there. But yes, yeah. Anyway, let's just move on. I don't want to keep on talking about myself or whatever. So obviously we know you're big into crypto, and this is your main sphere. My question is, what markets do you usually trade as a whole?
I mainly trade Bitcoin primarily.
Right.
I do dabble in Ethereum and Solana, as they offer like stronger liquidity and basically predictable market structures, so it's easy to pinpoint levels where I want to trade. I occasionally take some trades on altcoins if I see some setup, but I'm very strict on the ones that I think I trade around 4 or 5 of them, and you know, they're mainly, my main focus is on Bitcoin primarily. You know, my main focus and that. So again, my whole belief is stick to one market, learn it inside and out. You know, and that, you know, you can make money off every market. You know, the markets are still going to be there, whether it's Bitcoin, Ethereum, or Solana. So therefore, you don't have to have every single ticker that's on the exchange to trade with. You know, I've done it in the past where I've imported every single asset that's on Bybit to trade with, and I don't know half the time which one I want to trade on. So to be strict and disciplined with a certain amount of assets that you're going to trade, it has actually helped me so much, and it also takes away a lot of FUD. So like I don't trade Dogecoin, but I can look at a chart, I can mark it up and so forth, but I can see on Twitter, oh, Dogecoin's gone up 50-60%. That don't bother me. I'm not looking at the chart. I have the charts that I want to trade, and I can make money off these charts. That's all that matters. So that's what I can stick to. But again, Ethereum and Solana, I sometimes will take a trade in them. They are on my watch list, but it's mainly Bitcoin.
Yeah, and I think this also can come back to, you know, something we just talked about, talking about, you know, EMAs and crossovers. I think when you have a methodology to a chart which involves something which is directly associated to price action, and you can chart out without having to use some sort of data source like, you know, moving average, I think it rewards you more when you focus solely on one chart and you know the history of that chart, and you apply everything you know across the board to Bitcoin, you know, like you said, Bitcoin. I think, you know, with EMAs, it might help to do multiple coins, you know, to try and find, because again, you know, to be disciplined, and not every crossover or whatever you use will always work. But yeah, I think, you know, with, and obviously, you know, knowing your, I don't know your methodology, obviously we'll get into that in a second, but I can assume your methodology is to be involved in a chart and really mark it out thoroughly and go from there. But yes, okay. I think we should move on to technical questions now. Do you want the chart to be up for this as well? Because I know we have the markets as well. And are you gonna talk through it?
Yeah, you're more than welcome to put the chart up.
Okay, perfect. So I'll bring it up now. There we go. So here is the chart on the right hand side. So I assume you'll go through it and you know, maybe use it to talk about the questions and whatnot.
Yep.
Okay, perfect. So first question we have on the technicals, quite a blanket one. What is the core of your method, just in general?
The core of my method is, well, first of all, it's not my method. It's a concept that I've learned from another trader, who's unfortunately not that active on Twitter anymore. He now runs his own private Discord group. But as I said, I've learned from many traders. I've joined many paid groups. It's consumed so much information. But when I found this concept, it was something completely different that actually followed how the market works. So to try and briefly put it, it's at its core is a strategy that's based upon liquidity gaps and market aggregation, basically focusing on how exchange engines match orders to create price action. So you'll get efficient and inefficient price action. And with efficient price action, like, all orders will be matched. You're basically filling the liquidity gaps within the trend as you go up or as you go down. But when you get inefficient price action, it leaves behind liquidity gaps, and that it can carry on with its trend upwards, but often the market will later revisit that to aggregate the remaining orders. Okay. But these, as I said, these are not basically filled immediately.
Yeah.
So yeah, if I'm trying to think, like, because if you can identify the liquidity gaps and track liquidity gap candles, I use liquidity gap candles to gauge market direction, in which I can show you in a minute.
Okay.
You can anticipate when the market's going to rebalance, and you can then position yourself for the next expansive move. So basically, I'll go on to a 4-hour chart, so I'll try and explain. So you can see the chart, yes?
Yep.
Right, okay. Ignore this 72k level at the moment, though I do think there is a slight possibility we could visit there.
All right.
But there is also possible swing being put on the daily. So, but a majority of it, if I go on, so if we ignore this side, so we had these lows, and then the market's put in a swing high, made an LGC. I'll go through what they are in the 4-hour chart because it's more easy to explain.
Okay.
Come down, we've dribbled a bit, took out the high, and then we've come down and took out all these lows. And this was the beginning of January. Everyone thought the low was in. Trump was going to get sworn into presidency, so everyone just thought we were basically going up from here. And what happened is Trump got inaugurated, so we took out a swing high, and then we've basically come down. So I want to show you basically the process of how you could have saw this happening, and then you could have seen this happening.
Okay.
Through the method that he uses. So on the 4-hour chart, if we go down to here, so this is where we took out all those lows, and we put in a swing. And then what we did from there is, again, we have liquidity gap candles, which are these, which is basically, you can call them fair value gaps, imbalances, voids, whatever you like. Basically, they are gaps in liquidity. So the mentor I learned from, we call them liquidity gaps. But it's also a liquidity gap candle. So the importance of these liquidity gap candles are the high, the EQ, and the low. And what we've done is we've dribbled down, took out, put a swing in, and we've come back through here. And this is a liquidity gap reversal where price has left a gap there, came down, formed a swing, and then pushed up. So this is actually an origin and a liquidity gap candle and a liquidity gap, because we have the imbalance there, we have the LGC, and also it's basically gone through the liquidity gap, which means a liquidity gap reversal. So I've just marked that out.
Right. I know there's
here.
Okay, I'm sorry.
No, sorry. What was you going to say?
I was just going to quickly compare it. I know obviously a lot of different methods name these sorts of gaps differently. Is this quite similar to? I know with certain people who follow like ICT, for example, they call it an inverse fair value gap. Is this a similar ideology?
The method. It would be very similar, but then if I believe that ICT would mark out fair value gaps as the actual gap itself instead of the actual candle.
Right. Okay.
So this is where liquidity gap candles add extra confluence into where the market's going to go.
Okay.
So this whole move here is efficient price action. As you can see, we've put in the LGC, we've pumped up above it, closed above, retest, put in another LGC. Price has then come down, filled the gap. We've also taken out this low, closed back above the EQ, find a resistance at the LGC high, come back down, take out this low, and then we form another LGC. So you can mark these going all the way through the charts. Like this candle here was just a retest of this LGC high, and then price just continued up. And it wasn't until we made this high, which I believe is confluent with this liquidity gap. So we just filled this liquidity gap, made a high, come back down. We've had put in a liquidity gap reversal. And the liquidity gap reversal is basically where we've made a gap here. Price is pushed up, and the next candle is then come down, took out that gap and closed below. So that's a reversal. But that doesn't necessarily, like, liquidity gap reversals on their own mean nothing. Like it doesn't necessarily mean that that's going to come all the way back down, because as you can see, this has been an efficient efficient market. We've got a gap there, And all we came down then, sorry, that's my
So,
words. All prices come down and done then is basically retest this LGC high with a sweep. Swept the low, continued on, and it wasn't until we've now took out all these highs
right,
and prices then push back down. And where has it come to? It's come to fill this gap
right, okay,
and these gaps here. So now we filled these gaps. Presumably the only other gap left out of here is this one, which again aligns, sort of aligns with the EQ, but it's also the origin of the expansion. This from this candle, once we came back down, we then expanded.
right, okay. And
So
and
this
with
level
these
is,
with these candles, what is the process of completing them? Is it a complete fill? Is it a certain area, coming below the equilibrium of it?
the price can retrace and take out the LGC low. That's what I mean.
Right,
There's
okay.
three sensitive levels. It can
Yeah.
come all the way down, take out the low, and then continue its trend upwards. So
Okay.
it's a matter of just trying to understand where the liquidity gaps are and where the LGCs are forming to gauge the market direction.
Okay.
So after that, obviously we've got this swing high that we put in, that we then dribbled down, took out the low. Trump gets inaugurated, the price comes out, we take out the swing. I'll just delete these quickly. And we've got these two gaps. Well, I chose the main original expansion. So then we've come out, took the swing out high out, price come back down. Where did it come back down to? It came down to this gap. But then we've also closed below, which in the method I use, that's a liquidity gap reversal. That means there is also going to be a change of flow. That means that the flow's changed to the downside unless price can come back up and possibly close above this high and continue the trend. But at the moment, that to me would be a liquidity gap reversal, and I'll show you in a minute how it's actually worked on today's dump, how you could have marked it out as well. So we've come down and we've got a tiny gap there. Tiny gap, and all price has done there is basically rebalance up to it, aggregate the orders, and then continue down.
Right, okay.
So, but we put in this LGC here. Now this LGC turns out to be the sensitive level that I was watching during the time of when I was posting in Telegram. So we've come back down. We've then orders have then dried up. We've come back up, tested the EQ, still can't close above. Come back down below the LGC low. We've then formed a swing, come back up, and what did we do? We came straight back up and we took out this high.
Right.
As soon as we took out this high, we've then dribbled about, dumped down, and we've caught LGC, LGC, LGC. So from this LGC here is a sensitive level, but then this is where the whole method of using LGCs and liquidity gap reversals and liquidity gaps come into play. So from this whole move up, this expansive move, this is the origin candle. So from up here, I was watching for basically a reversal, a rebalance back into aggregate these orders down into this liquidity gap. So I don't want to give too much away, but
That's fine, yeah.
basically if I just mark this so we can see the EQ and have that there, and we come down to the 25th of Jan, if we go down to 30 minute, I should have just typed it in. So this is the EQ, and prices come up, raided the high, came back down, closed back below the EQ, and then we've basically dribbled down, and that's what caused the dump.
Right,
So
okay.
what you can do is, the whole methodology of this is basically you can mark out the origin candle. You can go down to the 5 minute, the 3 minute, whatever you prefer. But where this was a big, quite a big move, expansive move down to the downside. I mean, once we get that expansive move to the downside, as I said, we were creating LGCs, liquidity gap candles, all the way down. And price isn't just going to continue going down like Mike says. It never just goes in a straight line.
Yeah.
Price will have to eventually come back and rebalance those orders, aggregate them, and basically fill the liquidity gaps. It don't have to fill them all. It can come up to the EQ, it can come up to the LGC low or the high, but it's just understanding where the market is going to go based upon these LGCs. So if we mark out the origin of this move, you could mark out first candle high before we move down, but after we put this high in, this next candle here is what basically closed below the EQ, and you can see the sensitivity it had there. It retests the EQ, retest of the LGC EQ, closed below the origin. So this is the origin candle that led to the expansive move down to the downside. So you may see this and you may think, oh, I've missed it. You know, the price is gone. You know, like there's no way it's going back up here. But again, price, due to market aggregation, price will have to rebalance. And once orders dry up like it did, we're going to see, well, some price moves from efficient price action to inefficient price action. So you're always going to see it in the market. But basically, in the method that I got taught, price will have to return to the origin before it continues its expansion. So this is what I had marked up basically when I was posting in the Telegram what I was watching, and you can see how sensitive it is once it reached the origin.
Right. Okay.
Because what do? We came up, spiked into the LGC low, well, the origin candle low, and this is called a return to origin candle. You may have seen me post in Telegram when I put RTOC. It just means the price has returned to the origin candle.
Okay.
So we failed to close above the LGC low. Price has come down. Now this is a swing that led to this, again, a lower time frame swing, because we've took out the high. The candle previous and the candle next to it as two lower highs, so this is a swing.
Right. Okay.
We've also got this swing here. So once we've formed a swing, we've come down, we've took out the swing. So again, this is confirmation bias. This is confirming what you, basically the methodology of the whole concept.
Right.
So you know that there will be an expansive move. So this is where, as I said, by identifying liquidity gaps, tracking LGCs, and using liquidity gap reversals, origins, and you can basically anticipate when the market's going to rebalance. So I was very confident in seeing this. I believe I posted into the Telegram and said that I was expecting 92k. Obviously, we did go further down, but again, the whole concept of this is just liquidity gap candles. I'm not trying to catch the ultimate bottom.
Yeah.
And so forth. You know, I've got my targets. That's where the market should aggregate to. And obviously, once we get the same thing happened here. We had the 30-minute sweep. There is a swing in here on the 3-minute. Is it which you could have marked out? I think it's a bit higher. But so once you got that, that is basically the whole method that I use. So you have a 30-minute sweep into an LGC or a liquidity gap. You wait for a lower time frame swing to market structure break like of the swing. Obviously, most people will think, oh, they've missed this move, and once they see it coming back up, they probably anticipate, oh,
it's
that
gonna
was
count going. Yeah.
You know.
Yeah.
But once you've got this 30-minute sweep and you've got the break of the swing, you can basically mark out the origin, and you know you can sit all this out. You can just happily place limit bids at the LGC low, and with your stop just a couple of ticks higher, because if price does expand, then you do want to get out. But this is basically your area of invalidation.
Okay, and for the origin candles, when they form, is that what process do you recognize that form? Is that from the swing?
That's from the swing. So basically, if we got this 30-minute sweep, I mean, the only reason, obviously, look, we made sweeps up here and all that lot, and dribbled down all that lot, but none of that interests me. The sweep needs to be at a sensitive level, so an LGC high, low, EQ, mainly an EQ. But again, if we put in this 30-minute sweep and we did not break this and we just continued to, let me just get this out. If we just continued to not break that and then continue going
Right.
up, that I would not even mark that up. So it's only once we broke that swing that this origin candle is then basically validated.
Right. So it's like a sweep of liquidity, which brings us down and then brings us below our structure.
Yes.
Okay. That makes sense.
And then price will then rebalance. It's basically the market aggregation model where you'll see a liquidity gap reversal, you'll see a rebalance, which a rebalance can be in the form of a sweep or a raid. You then get an LGC formation, liquidity gap candle formation is basically what we saw here on the 4 hour.
Okay.
And then you'll get expansion to the level next level of imbalance flow, which is normally an untested liquidity gap. And obviously we had the LGC formation. This is the rebalance to the origin candle, but as we do have liquidity gaps on the lower time frames, you know, in this level anyway.
Yeah.
So again, once we came up, again a 30-minute sweep, break of the swing. This is double confirmation. You know, you can, as I said, stop couple ticks high. My level what I was looking at was down here, the 92k level, which was the expansion. I was very confident this was going to basically happen. And once we got this break of the swing, obviously this here is the exact same thing. So if this is a 30-minute sweep, if you go down to a 3-minute, I'll sometimes use the 5-minute, but 3-minute obviously gets you a bit closer in towards your invalidation. Sorry, I should have marked the actual date on this. I'm not going to find it now. Sorry, but yeah, we'll just go back to it. So, but
Right. I
this
get the
30-minute
idea
sweep,
there.
yeah, it would be exactly the same thing,
But on the lower time frame.
on a lower time frame. There's a lower time frame, probably a 3-minute or 5-minute candle origin here. That price is then took out the swing, lower time frame, market structure shift, rebalance back into the origin candle, and then we had the expansion.
Right. Okay. So it's just this is like a bomb of like, okay, we've set up this process of the sweep and then this break of our structure we had, and then the entry kind of idea is that retest back into the high this time frame origin candle, which then brings us down from that process.
Yes, yeah, exactly. And then obviously the majority of my analysis is done on the 4 hour. So obviously once I saw this sweep, obviously I'd go into the 30-minute. You probably see the time frames I use. I'm very specific on what I use. I only look at the 4 hour, the 30-minute, and either the 3 or 5-minute. That's no hourlies, no 2 hour, no 7 hour, you know, or what people use. It's versatile. This whole concept will work on those time frames, but the person I learned it from is so much easier to understand, and it's very accurate. Like once we put in this 30-minute swing, we had the return to origin candle, and then we had the expansive move back down to the origin candle at 92k. Now I was actually quite bullish here. I thought that was the low and we could possibly move up in here, but we had this LGC which we needed to get through. Basically, this is sell side flow. This is basically signaling that there's a change in flow, that the only way Bitcoin's going up is if we close through this LGC. So all price did was come up into this LGC low, took out the high, carried on. Now we also did put in an LGR here. So price is basically, we've got an LGC high, come up, took out the high, came back down and closed below the LG. So this is a liquidity gap reversal, which then makes this liquidity gap.
And that liquidity gap reversal, that's, like you said, so that's flipping below so like that blue one, for example, on the left, that's coming below that one, printing below it. Is that also producing another liquidity gap candle, but which prints below that other one?
Yeah, so basically we come back down to the origin of expansion, came back up, we've closed through here. So this is a liquidity gap reversal. This is what made me kind of bullish that price was going to move up, but again all we did was come back and rebalance into this LGC, didn't quite aggregate all the orders. That's why this is still a level I'm watching 104k, because as I said, the whole concept of this method is price will rebalance back up, that these liquidity gaps will basically get filled. It doesn't have to happen immediately, but the market will often revisit them to aggregate the remaining orders before it expands or it goes down or so forth. So basically, once we took out this high, we've got a small liquidity gap candle here, and then we've put a liquidity gap candle, which is also a liquidity gap reversal, because it's closed below this LG.
Right, so it's not inclusive. So it doesn't have to be a liquidity gap candle to then be a reversal.
No.
Okay.
It's not inclusive. So, but it has made that basically, because of this liquidity gap reversal, and it's also an LGC, a liquidity gap candle. I mean, there's no, before this printed, there was liquidity gaps obviously formed between here.
Yeah.
But it now marks it out as a sensitive level to watch, because again, we've reversed back below this LGC high, and we're struggling, we're finding resistance, we can't basically print above it, and it's also aligning with the EQ of this LGC. So this is a very sensitive level to get across, and so again, price would need to flip here and flip here to become bullish
again. Yeah, that makes sense.
Trend continuation.
Yeah.
So basically, all we've done there is just dribble. You can see we're finding resistance at the LGC low, coming up into the EQ, taking out a high, closing below the LGC low, dribbling around, taking out highs, and dribbling down. And it wasn't like, none of this interests me, because as you see here, we've done a 30-minute sweep into an EQ, but did we break the swing?
Right.
No. Did not close below that swing. Like, again, you can go down to lower time frames and that, and you'll see that there's no break, and it was closing back above this level. Again, this swing here, let's move up here, no break below the swing. It's not until we take out this, and you can mark out this as your swing, like suppose I had a lower time frame level watching, you can see we do have a candle close. And just that slightest candle close doesn't necessarily mean it's going to reverse, but where we're finding resistance at this LGC, the probability is more than likely that we could see a reversal.
Right.
So all price did then is, once we close below here, put in an LGR, liquidity gap reversal, failed to close below it, market moves up. This is just like, it's efficient price action. Like, every gap is being filled as it goes. There's nothing efficient about here until we get this move up here. And this move, obviously, this is the LG. We managed to hold it, but we only held it because we took out this high.
Yeah.
We then closed back below. And again, this is the same method as it was back here.
Right. Yeah.
30-minute sweep, break below the swing on a lower time frame, which could be around here, and then you could basically enter on a rebalance. But I think I posted that I was watching like this whole thing here was accumulation.
I think so.
Like
the accumulation phase, exactly. Yeah.
And I was expecting some sort of expansion once we came down to here, because this level here is just, if I've explained it good enough, you'll understand what I mean now. But all this level here is just the weekly LGC high.
Yep.
And if we go to the daily, it's also a daily LGC high. So this again is a sensitive level, as you can see how prices reacted around it. So basically from here we had the expansion back down to the LGC high. Now I think Mike said that we were bottoming around, like he called a bottom, and I was quite confident that we had bottomed around here as well. Again, with LGCs, the most sensitive levels are the high, the EQ, and the low. So if we mark out the actual whole candle itself and go down to the 4-hour, all price did is come down exactly to the EQ, form a swing, took out the low, sorry, and failed to close below through the EQ, and then basically just make that an EQ, and then expanded again. And again, this, you can mark out this liquidity gap here as your origin, but where this weekly, daily LGC high is such a sensitive level, we basically printed an LGC high straight through it. LGC candle straight through. So this is not, again, not only the LGC, it's also the origin candle of the whole move. So as you see here, as I said, the higher the EQ and the lower the most sensitive levels, this is where you want to be looking to get into a trade, to or not necessarily get into trade, but this is the levels you want to watch to see where price could go next. Obviously, we've come down into the EQ, formed an LGC. I've already said LGCs can help you in market direction, trying to gauge where the market's going to go to next. So all we've done there is LGC, we've dribbled above it, build this liquidity gap, took out this high, and then come back to the LGC high, had a sweep above, back off expansion. Now, again, we've had all this sell side flows from these LGCs. If we mark them all up, you can see it didn't quite hit it, but again, we have an LGC and we have this LGC which closes through the LGC, which again is another prominent level. And what did it do? It came straight up into the EQ, failed to get above the LGC low, came into the EQ, failure to continue, close back above. And then with this LGC, we have formed another one. What did we do? We took out the high into EQ, expansion down. Again, this is a 30-minute sweep, the same process as what the previous ones I've been showing you. Obviously, had a massive expansion, didn't take out the swing, but again, if you were to look inside this LGC, there's lower time frame swings that price is basically shifted past. So we've come down, retested the LGC high. All this is here, I mean, if I drag over this origin candle, it's the same thing that we see. This is why I remained kind of bullish. I think I posted again in Telegram that price should run from here.
Right, so like you showed earlier with the negative side of things, where it came back into that origin candle area, coming from that bit.
So,
right.
We failed to get above this LGC, formed another LGC, 30-minute sweep, and then expanded back down. All we did is expand back down into the origin candle, into this LGC.
Yeah.
And we've put in a raid of these lows into the EQ with failure to continue. We failed to trade through it, and then obviously pumped back up. This is now liquidity gap reversal. Prices come through that liquidity gap and close above. So we've got liquidity gap reversal. We've also got these liquidity gaps here at price that basically I was targeting. And again, we failed to continue again. We came straight up into this LGC, hit the LGC low, formed a swing, and then dribble downwards. Now this is an LGC, but it's not it's a liquidity gap reversal and it's a liquidity gap candle, but it's not the origin. So I did it where we've now come into this EQ. I wouldn't classify this as basically usable anymore. The only thing that I'd be interested in is basically now as playing this as a range. So what I mean by that is from this low to this high. So we've got support at this LGC high. We found resistance, continued this outside flow. No, there's been no change in flow. There's no reason to go long. No reason to call for 100k or nothing like that yet. So yeah, I would then trade this as a possible range. And what I mean by that is we've created inefficient price action moving up here. We've gone from inefficient to efficient to then another inefficient move, but that was just reaching towards this LGC low basically to grab more orders. So the only main one is this liquidity gap here. So once we took out this high and we have this LG here, this liquidity gap, you can see how sensitive it is once price returns to it again, because if you were to mark out the whole LGC, again, it's the same thing, come straight into the EQ. This liquidity gap here, this high is aligns with the LGC EQ, and all price did then take out the high. Again, the same thing. There was no close below the swing, but again, this is the 4-hour time frame. So in this candle here, there's going to be a swing in the 30-minute or a 5-minute. So this would then exactly aligned with a 30-minute sweep, and all this is a rebalance back up to the origin candle expansion.
Right.
And where we expand to, I would have like it's like some people don't believe like how you can get such like invalidation targets, like, oh, like why isn't your stop higher, like how did you get, like, oh, you're obviously moving your stop. But with these LGCs and marking out and using this methodology, you can see that you have a clear invalidation, like back up here.
Yeah.
Like your invalidation is above this LGC high. What did price do? Came nowhere near it.
I know what you mean. So it's very set in stone. It's like it either hits, it will hit this and be resistance, and that's the stop loss, or it's not going anywhere near there. Like once it goes surpasses that stop loss, you're not even going to be in this scenario to be going down anymore.
Exactly that. So
Okay.
like even in this trade, that's a 30-minute sweep into the LGC return to origin candle. On a lower time frame, you'd have had limit orders at this origin candle, and you'd have targeted this algae here. Like, but again, with this methodology, once you get a close through the algae, like, so this is the only real pivotal liquidity gap level we have. It's also at the level in which price expanded from. So once we get a candle close through that level, I expect the low to get taken.
Right. Okay.
Like it's basically as in range trading. Like the low will get taken 9 times out of 10. That low will get taken. And even if you were to mark out this LGC, you can see what all price has done recently. Just today is we've closed. Once we got that close, as I said, target here, and all prices did dribble down. We took out that low. I'm more feeling that this swing is going to get taken now.
Which price is that? Oh, sorry, that's quite far away on my screen.
78.
Right. Okay. Yeah.
This last week's low.
Yeah, I agree.
So yeah, all price did was basically dribble up, rebalance the orders.
Okay.
Came into the EQ of this LGCQ, even if you go down the 30-minute.
Right. And with those green candles, so what's the delineation between like them?
It's the same thing, just marking the origin.
Right.
And what did price do? Back up into the EQ expansion.
Okay.
So it's a very clear, systematic, like, and rule-based strategy that you follow, like allowing you to basically make informed decisions rather than relying on your emotions or random setups or stuff like that.
Yeah, it's listening to this and you showing us this. It's been really structured, and the whole time you've been showing up, like, okay, that actually makes a lot of sense. Like this, like
I'm explaining it as good as I can, because the person I learned it from, as I said, his approach to this whole method was very a scientific approach to it, and that's what got my interest in it, because it's so different, and it wasn't just based on EMAs or like if you're oversold or undersold. It was basically because all of those indicators just are lagging. Basically, they come from the data that's on your screen. So what's more better to learn than the data on your screen? Price action, yeah. So understanding that and understanding how the market will go into a rebalancing stage, it will
100%.
Those liquidity gaps will get filled. That's why I'm quite scared that not scared. I don't want to scare anyone just yet, but there's liquidity gap candles all the way up on the weekly chart, and when we hit 20k before, this is before I even learned about liquidity gaps. I remember marking out like 16k. No, sorry, it was about. It was something stupid, like something really low, and I thought, there's no way the market's gonna reverse and go that far low. It turns out we went lower than what I expected.
Right. So. Yeah, well, things can happen like that. I mean, there's countless times where if you go back in Bitcoin where people have thought one thing and then it's just gone even worse or even better in some cases than anyone's ever expected. But no,
exactly.
The explanation, the entire time you've been going through this, I've been like, okay, this makes a lot of sense. And like I was saying, like the basis behind this process is very, like, it makes a lot of sense. Like, again, going back to what makes up the market, it's the orders and where they get placed and how they get placed and how that gets treated. And this is, that is assumedly what goes behind this, obviously where the orders get placed. So it does make a lot of sense. Yeah, it makes a lot of sense, this process.
Exchanges have price engines, and once you see momentum and orders coming in on one exchange, other exchanges have to have their own engines, basically have a aggregated price for that, you know, so it matches everyone else, so it's
Exactly.
fair, so it's a fair balance for everyone. So
Yeah.
therefore, that's where the market aggregation comes in, like in understanding that and price action, market structure, liquidity. You know, they're all things that I would heavily promote people to learn rather than, you know, going and sticking some indicators. Like, don't get me wrong, I never brought it, but I used variations of market cipher you know, waiting for that green dot to tell me when to long.
100%. I mean, I remember going back to when I was talking about my dark times. I had quite a long stretch of using that, and again, it worked. You know, again, going back to the idea, it works until it doesn't.
Exactly.
Yeah, until it doesn't. So one thing as well, actually, you finish first, and I'll ask you.
Oh, no, sorry. I was just going to say, and most of the time, it's just going to give you false indications anyway.
Yeah, exactly. It's
it'll
lagging.
tell you to go long, then 10 minutes later, it'll tell you to go short.
Exactly. Especially on the lower time frames, it's even worse. Like, there's no point even trying to use it on lower time frames. But going to the candles again. So the blue and the red, perfect sense. Green ones. What's the delineation? The green. Why?
Right. If I just show you, so basically, all they are is they just mark out liquidity gap reversal candles. So the blue and red ones are your liquidity gap candles or liquidity gaps, and then these are your reversals. So as you can, the star like above these ones, these are called basically the GOAT liquidity gap, like the greatest of all time liquidity gap reversals. They're very, very, very accurate when it comes to, again, used within confluence, but
right, that makes sense.
What basically all that is basically taking out liquidity of both sides of the candle, of the previous candle, and closing below a liquidity gap. So that's not only just ran a high there. I'll try and zoom in.
But it's also had that wick below as well.
Not the wick below. It's basically there's a slight tiny gap there that price has created. I don't know if
right, okay.
And all that is, so you can see that better now. So all it is this candle here is a liquidity gap reversal and an ARC. The terminology for ARC I can't repeat. I can't say on this show. Unfortunately, the person on the mentor decided to give it a absurd name. But yeah, basically, it's an ARC. It takes out both sides of the candle, previous candle's liquidity, and then it's also closed. Like the slightest liquidity gap there is then closed below that gap. So then it's a liquidity gap reversal and it's an ARC. So again, there's a high probability that market's going to reverse. Again, it doesn't mean it on everything. It's got to be using confluence. We had one here where prices took out the low and closed through this tiny liquidity gap. But again, it's got to be used in conjunction with everything else. This was inside an LGC, you know.
Right.
So
yeah, so, unless it surpassed it, exactly. Yeah, when you're exactly at the resistance point. Yeah, that makes sense. Okay, right. So when you're talking about these liquidity gap reversals, this is also what just marks out those to make it easier.
Yeah, I very rarely have the reversal on to the downside because once you know what you're looking for, it's quite easy just to understand like what can exactly.
Right.
But I normally keep the reversals to the upside if we're in a downtrend. So therefore, like I'm not just looking on the 4 hour, or like I'm looking on higher time frames as well to see where price can reverse that. Because the reason why I say 72k is kind of a prominent level to look at is because if you look at the weekly, this is the LGC that flows through. This level here is a 4 hour liquidity gap. If we go down to a 4 hour, you'll see how sensitive this level is until we finally show you, so it'd be easier to explain and I'm dragging everything away. Right. So this 4 hour liquidity gap has been sensitive the whole way through. So it was back here when we first came up to around 75k.
Yeah.
Basically, we formed an LGC, and it's the same methodology again, but I just chose to mark out the liquidity gap candle. You know, vowing to get above the EQ. Had a push up. All that push up was just to fill this liquidity.
Yep.
You know, so with all the orders have then been aggregated, what can price then do? It can then reverse and continue its expansion to the downside.
Right.
So this was a sensitive level to watch, and hence I've got on, because when we finally did flip it, obviously we had resistance here, push back down, formed a swing. We put an LGC straight through this, retest, expansion.
Okay. Right.
I consider this as quite a sensitive level, and not only that, it's also confluent with the range high. If you were to draw, basically that as your
Yeah.
range,
Right.
like however you want to draw it. I normally draw it from the origin up into the high, but as you can see, it's even a free tap setup where basically we put in a low, took out that low, retest of the range low and expansion. So, but again, the 72 comes in again very close to this range high. This is also the weekly LGC, which we formed through that level, and the EQ again lines up with
That area.
the
Yeah.
liquidity gap. Yeah, exactly. And it's just an ongoing thing. Even if you were to go down to the daily and try and refine it a bit more down to the daily LGC,
It still has
pushed
that
through
high
that
point
level,
though, like consistent high point
it aligns with the
as
EQ.
well.
So
Right. Yeah.
therefore, I do expect it don't necessarily have to happen. The market can completely reverse. That's why this whole concept is a candlestick by candlestick approach.
Yeah.
Like I'm saying, we could come down to this low. All I'd be looking at is just this LGC, but
Yeah. It's just an
there's
ongoing
a good
process of looking at it and reanalyzing and stuff.
yeah. Just because we put an LGC doesn't necessarily mean we're going to go straight
Yeah.
there. We can easily just see a sweep of these lows, back up, and then continue. Because
Yeah.
again, what do we have? We have liquidity gaps here. Liquidity gaps. It's also an LGC. So if we were to get a close through here, that's quite bullish.
Yeah.
But then again, I
There's a
wouldn't
lot above
expect
us to have a chance of being stopped.
exactly.
Yeah. I agree. I mean,
Exactly. So
yeah.
that's
To
why I still
slightly
expect
compare
some
it,
more downside.
yeah, I agree. I mean, with what I've got, I have a 76-ish area, and then I have the equilibrium at about 72.5, wherever it was exactly. I can't remember. But no, I agree. The market's always evolving. It's pretty impossible to get something which you can draw and immediately know, okay, no matter what happens, this is going to be something which happens, like regardless. Like seeing, 2, 3, 4 weeks into the future, you always have to keep on looking at the chart as it evolves over time to make sure you're up to date with it. There's never going to be something you can just look at it once and then always know what's going on. But no, yeah, I mean, with what I've got, I've so far with a lot of our prices, I do agree. So I know this is a good process to follow, because I've agreed with you so far completely.
No, is it? And obviously, the person I learnt this from, as I said, the resources are out there. He's not that active on Twitter, as far as I know. I do have his notifications on because it's a very prominent trader in my opinion. He's very well versed, knows what he's talking about.
Yeah.
But again, like any trading strategy, nothing's foolproof. One challenge like with this is that, as I said, the liquidity gaps are not always filled immediately. But like price can continue expanding inefficiently for longer than you want to until it actually reaches a certain specific level that a rebalance will then occur.
Yeah.
So it definitely requires patience, discipline. You can't where it's so systematic and there's rules to follow. Like taking your emotions out of it is quite. It's not easy to do, but it's if you follow, it's following a strategy. Basically, that's what you got to do. And I've gone wrong so many times where, like, I'll see a where's my mouse gone? I'll see a 30-minute sweep and price will, I don't know, come up into the EQ, and unfortunately I'm looking at lower time frames, so therefore I'm thinking, we've just put in this LGC here, therefore the next candle, and then we've put in this, but the origin's all the way down it, so like then I'll close the trade when really oil price, so therefore it's very systematic. Like you've got your invalidation, a clear invalidation, you've got your clear targets, and I mean sometimes you may even see me put in, how can I explain it, the measuring tool that I use. So I'm trying to think what's the best way to do it. I'll show you on this latest move here. So so this was the LGC EQ. Actually, let's go to 4-hour mark out. Just mark out the EQ. Now this is what I was actually looking to trade today, but I did not get my trigger. So I was looking for the short because we had ran this ran this high, done a 30-minute sweep into this LGC EQ, and then we've continued to basically trend downwards. But I was waiting for this swing to get taken before looking, before basically even marking out this level. This level wouldn't even been marked unless this swing got taken. But unfortunately, if we're probably going down to the 1 minute, there's probably a 1 minute swing there. And all price did again was come into it. And if you go to the 3 minute and you add your measuring tool, this is what I mean by the trader was very scientific and mathematical when it came to this approach. You know, where things, most of nature comes in threes. You can see right here that you know, I normally aim for 6R. Like, it sounds stupid, but it's quite easy to get if you understand. You know, and you, again, I'm not looking for 30-minute sweeps anywhere or 4-hour sweeps anywhere. It's got to be inside an LGC. It's got to be inside into a liquidity gap. You know, there's rules you've got to follow, not just any 30-minute sweep. You know, as I said, the swing didn't get broken for me, so therefore I didn't look short. If the swing got broken,
so it wasn't showing signs that it was going to continue the structure downwards to have a new lower low to continue.
No, to me it wasn't. Even though I am bearish and I'm expecting it lower, and I knew a rebalance was going to occur because, as I said, we closed through this liquidity gap and then we put an LGC down. So then we took out this low straight away last night. So when we got this dribble here this morning, I was just expecting this, as I said, to be a rebalance and then continuation of the trend downwards. And basically, once you mark out your origin and you use the measuring tool, basically, as you say, 6R's here. You know, so you could have just got in for 6R. Invalidations above this high. Your limit orders placed at the origin candle low. And then all price did, tried to raid into the EQ, failed to continue. I mean, don't get me wrong, like, if you do have a clear, concise level when you know where price is going,
you can put it there,
go for it. Go for your 9R, you know, 12R. But I try to be in and out as quick as I can. Like, I'm waiting for the efficient price action to happen, and I want to position myself before the inefficient price action, the expansion downwards or upwards. That's where I try and that's exactly what happens here. This is just, we didn't get the market structure shifts on the time frame that I'm looking at, but possibly on a lower time frame we did. And all we did then was rebalance and then expansion. So it's a clear, concise method to follow, like, once you learn it.
Well, that was a brilliant explanation. I mean, that was a good explanation. As we were going along the chart, it made a lot of sense. I think it was a very clear-cut explanation of each component. And looking at the rest of the questions on the technical side of things, you've answered the majority of them.
I just noticed I have spoken for a long time, so that's fine. That's good. If I'm just welcome to show you, because like, this is what I mean. Like, everyone has their own trading strategy, and like, basically different methods will always sometimes, well, more than likely, mark out the same results. So, like, I have a mixture of indicators. I know I was mocking indicators at the start, but you know, I have a mixture of indicators. You're happy to anyone watching to like, these are all free except for this custom-made one which marks out liquidity gaps. But these are all what I would recommend as good indicators. You have, like, just for example, market order bubbles. These are people placing in market orders in real time. So basically, as you see, people are market shorting here. And if you had your levels on, then you know that obviously, like, it's into the EQ. People are shorting into the EQ, so you're looking for a lower time reversal here because you have confirmation that people are looking for shorts. Once we got up into this LGC EQ, people were market buying. You know, so there's confluence, and there's also
the confluence of those gaps where they actually will have those orders.
And the reason why loads of people, like, as far as I know, is going to 70k as well, because this is what I mean by everything comes up with the same results. If you just, let me quickly get rid of the VWAP. I don't trade VWAPs, by the way. Again, this is just used as confluence. Like, I can add this onto a chart and look at it and basically see that this is previous quarterly value area high. Prices pushed above, back inside, failure to continue. And if I bring up all my, I'm just going to bring everything up. basically all we did then, as I already had it marked there, swept the high like I had it marked into the EQ. Yeah, continue down. Previous quarterly VWAP now closed below. What's more than likely? More than likely we're going to go and see previous quarterly value area low. So that's 71. So everything, like with the same context, everything works, you know. So
Yeah.
it's added confluence. That's what I use indicators for. I don't necessarily use an indicator to think this is going to tell me what to do, but I'll use it as in confluence of where price.
Yeah. There's no one magical thing to look at. Like there's always, there's always caveats or context to a lot of things. And, I completely agree with what you're saying. To make sure, again, I think you can take in 12 different data points and then, you're just strewing yourself across this mass of different things you can look at and trying to kind of absorb it all and try and make a trade off that. But it gets to a point where there's too much. But yeah, I mean, I completely agree with trying to get different things which fit your narrative, not in terms of trying to make a bias, but fit your process, which will make sense to you, and then obviously you can make a trade off that.
Yeah, this may not work for everyone, as I said, it took me a while to fully grasp the whole concept of it, but people may find it more, their edge may be EMAs or certain a different strategy. This isn't for everyone, but I'm trying to say this is out of everyone I've learned from, and I've tried loads of indicators. I've been in this space since trading since about 2019. So I've tried everything. I've spoke to everyone. I've joined all the groups. I'm not trying to say this is the all in all, but for me, this has been the most accurate way of determining market direction, and that in that respect helps me then position myself for either a long or a short. So
100%. I mean, again, completely agree on the point of everyone works in their own way. Everything makes sense. Certain things make sense to different people as long as it is not some magical fairy dust thing, which it actually doesn't make sense in general. But obviously, someone could somehow make sense. This is actually applicable to the market. So again, I completely agree. If it makes sense to you, and for me anyway, this actually makes perfect sense. I completely understand this process. Obviously, I'm not saying I'm you talking to me now have made me a professional, but I do now understand a lot more of your process now, obviously, than we did before we did the stream. Again, also thank you for that. This, I think if someone's logical, if someone can think logically, I think this makes sense to someone. Completely.
Yeah, that's what I mean. It's a hard strategy to get behind and understand it. That's why you can't just learn liquidity gaps. You've got to understand market structure. You've got to understand price action. I'm not saying you have to understand the individual candlestick themselves, like dojis or pin bars. You can learn them. They're good to know, but in full context, I haven't gone out my way to learn all that. I've tried loads of different methods, and this is the one that's stuck good for me. And as I said, it's where it aligns with market aggregation. It's the most accurate I've used. So
makes perfect sense. Brilliant. Okay, so I think the technical questions, we've covered them brilliantly. Even the market questions, I think, as well. I'm
sorry if I've rambled on a bit.
It's been good. It's been a nice flow of it. I'd rather you speak on all the questions in your process than me interrupt it to ask each question. So I think we'll move on to market questions, even though we've kind of looked at it now in terms of show it on Bitcoin. We've already looked at showing us on Bitcoin. How do you feel about Bitcoin? I'll ask the last three. How do you feel about Bitcoin over the last week?
Well, as you can see, I'm leaning to the downside at the moment, but I'm also expecting possibly, if we do come down to 72k, then I do roughly think that could be the low end. We could see a capitulation wick, down into your 60s. I'm not going to deny that, and that's again, it doesn't have to happen. This is just purely based on my on the strategy I use, and as I said, gaps don't always have to fill, but again, we have liquidity gaps to the downside, so I could see it possible, close below this level, wick into here, people calling for the bottoms in, calling for 50k, and then we completely reverse,
typical.
Sort of sort out that, and then completely up.
Completely. That could. I mean, to compare to mine, I mean, I have, like I said, I have about 76. Mainly, we have those three lows. I think the line you have there, that's the one of the lows I have on my ranges. It's it's at one of the low ends of the range where you normally see like sweeps. So very similar to that, basically the sweep of the low. And then also have the equilibrium at 72. So in terms of the comparison between what I have and you have, I have the same ones. I haven't really looked at 62k. I haven't actually looked that low, but I have, from what we have so far, I agree with those prices completely. So in terms of we've already also mentioned about the Bitcoin in the near future. Again, you just showed us just then. So the last one I will ask on terms of market questions will be the all-time high of Bitcoin. Everyone always wants to know what everyone else's all-time high theory is. That's like the biggest question. What do you think the Bitcoin all-time high will be, or roughly, or whatever?
I don't like making predictions, but
Okay.
I'd, you know, because once we breach past the all-time high, you know, we're going to be entering price discovery.
Exactly.
And,
No man's land at that point.
when we're, yeah, exactly. And the Bitcoin tends to like create large inefficiencies, you know, once it enters new price discovery. So and it usually trades in ranges. So that's what I've found to be anyway. So if I was to call a top, there are some prominent traders that I know that trade Elliott waves, and they have a fifth wave impulse move up into around 250 to 300k.
Yeah.
I would slightly agree with that. I could see that happening, but like again, I trade levels. You know, I have my levels that I trade.
Fair,
so if we go to there, then we go to there, and I trade around there. So that's it.
Yeah, completely agree. Yeah, I mean, I think there's two spheres. Obviously, there's people in the middle, but either you've got 50 million potential areas you've got, or you're just in pre-existing price action. Like for me, obviously, my ranges they work. They also not predict prices, but they have range. They have prices above what we've already seen. So I have a 200-ish K area. But yeah, I mean, again, it's hard to predict. You can't predict. It's just guessing at that point, and we've never seen any prices higher. So
there's no data. I mean, that's
exactly.
what I mean. When we surpassed 75k and started going up to 100k, it's you need, as in my opinion, more data like in the charts to actually start to gauge where it's going to go next. You know, so
yeah, if you're completely agree. If your basis is something which is market driven in terms of price action we've already seen or things we've already seen, then it's pretty much near impossible to try and actually predict something you haven't seen yet. And you really have to use a strategy or use something which doesn't actually directly interact with price action, like ranges or whatever, because you know you can't predict price action when it hasn't happened. So yeah, I completely agree. Yeah, perfectly fine. Well, the next and last part we have are takeaways. So this is kind of an area where I aim to ask some blanket questions where someone could take away. You know, if they listen to your strategy, went, I don't really like this, could you still give them some good information? So the first question I will ask: what advice would you give someone first getting into trading? So they have no idea what they're doing. They've never analyzed a chart in their life. It's quite a big question, I know. What would you aim to give them? It doesn't have to be an entire strategy, but you know, what would you advise them?
My main thing I would try and state with someone who was trying to start off, if I was to speak to myself first coming into the market, if I was able to go back and tell him what to do, I'd basically say study price action, understand the market structure. You know, you don't have to necessarily use what I've learned, you know, but instead of, you know, putting on these indicators can help and whatnot, but again, they're all proportionate to the time frame that you're using. So therefore, you know, a weekly oversold RSI doesn't necessarily mean it's gonna like dump on the 4 hour, you know, and so stuff like that. So, but definitely don't blindly follow others. You know, don't blindly follow me. If I post a chart, you know, don't just go and do what you like. I think Ishan said the other week that he made loads of money off a short that I called. I don't even remember telling anyone a short. You know?
That's fair. No, there have been moments, Kishan said in like the OG group, that I've said something, I don't really remember saying it, but he's traded. So I say, thanks, I guess. But yeah, I know what you mean. Yeah,
so don't blindly follow me or others. Like when the person that I used to learn it from, basically they used to post charts, and instead of just like, he would never say whether to go long or short, but I would look at those levels, I would mark them up on my chart, and I would try and understand why he's marked those, you know. So try and learn from, I think the saying goes, you can only stand on the shoulders of the great or something, like to become great.
Yeah.
And but yeah, one I will give. There's a trader called I think Mike's mentioned him on the show before, Tyler Durden on X.
Oh yeah.
He's a very, very, very good price action trader. I've learned a lot from him to do a price action. But there was one thing that he said that stuck with me, and it was basically to stick to one strategy and possibly one market and master it. You know,
Yeah, that's
you can
fair.
become the most boring mechanical trader out there, you know, because no one's going to care how boring you are once you know how profitable, you know.
Yeah, completely agree.
It's like I became more profitable once I decreased, as I said, once I decreased the amount of assets I was trading.
Yeah.
And that's why I only trade 3 now and a select few altcoins.
Yeah.
But you've also got like there's so much I can spout out which I'd wish that I could tell my former self. You know, like
Yeah, I
learn
know what you
proper
mean.
risk management.
Yeah,
Don't risk more than you can afford to lose. You know, know where your invalidation is before
exactly.
you even place that trade.
Yeah, I think
You know,
a lot of people, regardless, like a lot of people who are good at trading, would probably go back and look at themselves and smack themselves on the forehead, and you just go like, "What are you doing?" But it is just generally that process. You have to go through that process. You can't immediately, just become this great trader. You have to go through that process of
no,
becoming the trader.
like as I said, I've blown a few accounts, you know, in the past. It's
Yeah,
been liquidated on the whole lot, but the way you look at it, it's going to happen to everyone. No one's going to in this market
exactly,
and not lose a dime or a penny, you
exactly,
know. So, but it's sort of like your tuition fee. You're paying to, you're
exactly,
paying the market to learn from them, and if you don't learn properly, that market's going to take your money. So,
exactly. Yeah,
and
every loss is a learning experience of why did it happen and how could I change it. It's not a
exactly,
failure of your character. It's just a caveat or a kink in the armor, whatever you want to call it, which you just iron out and then continue on. But another saying I like, which could apply to this, going on to the idea of just sticking with 1, 2, or 3 charts, whatever, is jack of all trades, master of none. It's like, if you're just looking at 20 different charts, and on my streams as well, Bitcoin, Ethereum, Solana, I can, if people ask for a coin, I can put my ranges on them and give them, what I can look at. And obviously, if we do our Wednesday streams with different coins, I will use that. But the majority of things I look at, roughly in the same boat. I don't look at anything outside the top 3 really, to try and look at and trade, because it's if you're relearning the situation of a chart over and over again, looking at different coins, it's like I'd rather know Ethereum and know Solana and know Bitcoin and know these things as much as I can, and know the history of them based on my
rather
ranges
than
and
trying to get so many
exactly,
to choose from. Yeah.
exactly. I 100% agree with you.
Finally, like journaling your trades, I've got to say that because there's so many. Like that's one thing I didn't do for ages, and it wasn't until I actually started journaling my trades. Like literally, you may think it's time consuming, but if you want to take this serious, then journaling your trades is a must. You know,
Yeah,
you can look back, you can review every trade you take, seeing what's going wrong, and refine your process in
yeah,
entering. You know,
completely agree.
for a lot of my time, when I first started this, I wasn't waiting for the return to origin candle. I was, I thought, oh no, it's looking bearish here, so I short here. I wasn't
Right.
following a strategy. So,
Yeah.
yeah. So once you look back in that and you see that in your journal, oh look how many times I've lost. Oh, why did I lose? Because basically I wasn't following a strategy. I
Yeah.
was getting in before I was following the rules to get in. So yeah, and I use a platform called In Silico Terminal. Like I trade on BitGet, but I use a platform called In Silico Terminal. You create an API and it trades through their platform for you.
Right.
And
Okay.
they've added TradeStream, and basically it's an integrated journal. So like every time I trade on there, it's already been journaled itself, and then all I've got
Right.
to do is add notes and so forth.
Okay. That's pretty
So
cool.
like there's other ways to do that, so you
Yeah.
don't have to literally get back in
Yeah.
like what I used to do,
Pad and
write it
pen
in
or
a book
whatever.
and stuff.
Yeah. You
Yeah,
can do video logs as well. I mean, you can do a little mini video where you talk to
yeah,
yourself
I've
and
done them.
go over. Yeah.
Yep,
Obviously, I'm
yeah, I've
not.
done them in the past.
Yeah. I mean, obviously my streams, I don't show that many trades. I don't do a lot of live trading, but I agree with that in terms of my process of it is I sometimes record private videos as well, where it's me just talking to myself like I'm making a video going over the trade. But yeah, it does definitely help when you programmatically go through your trade and talk about it every single time in the same way, and just show how you did it. Yeah, I completely agree. That helps. Or for me, it's helped quite a bit as well in my process.
Yep.
But So number two, obviously I know you talked about the person you learnt from. Obviously isn't as active on X and has paid groups, whatever. Are there any resources, whether it be that one or any in particular, where you would recommend to learn from?
When it comes to educational material, I can name a fair few traders. What I'll do is I'll make a list and I'll post them in the Telegram.
Yeah,
But
perfect.
as I said, these traders can be hard to find. But if there was one I was going to be off the top of my head, he's been by far one of the most helpful when it comes to understanding the markets, proper risk management. He's a UK-based trader as well. Absolutely brilliant man. His name's Trader Dante. He's on Twitter. He's on YouTube. He likes to swear a lot, but then most British people do.
Yeah, exactly.
but his sense of humor, is brilliant. He's a down to earth guy, and he's been through it all. Like there's like his stories on YouTube where he can chat about what he's gone through. All different types of firms that he's prop funds that he's worked for. So yeah, he's definitely, if you want to improve your edge and treat this as a career, then yeah, he's definitely one I'd suggest.
Brilliant. Right. Okay. Yeah. Well, the list in Telegram would be greatly appreciated. And obviously,
yeah, I'll do that as well.
Yeah. If you're someone who's watching and you don't know what Telegram is, you can go to the description. And while you're down there, you might as well subscribe. This has been great content so far. But go to the description. There is a Telegram link there. You can go join it and you can go see this list. And then, so the last two, this one, your biggest loss. How'd you learn from it? What did you feel? How did you feel when it happened? Information.
I'll try and go through this quick because, as I said, I've had a few losses. You will do if you've been trading for as long as I have. Yeah. But it's just part of it. You've got to get used to accepting those losses and moving on. Yeah. But it's not my biggest loss, but it was one that made me sort out my risk management and try to knock down what I was doing. It was when we had I can't ever say his name. The Chinese president, the Xi Jinping pump back in October.
Right.
It was October. It was about. I know the exact day because it was my niece's birthday. It was October the 25th, 2019, and this is when I was just trying to get my focus on learning how to trade. I had about $25 or something like that on Bybit, and me being stupid, as I said, I was trying to learn as much as I can, but I was also thinking that I knew enough already. I went 80x with $25, and I think like within an hour I turned it into like 120, 130, and like I was happy. But then I longed again, and I think it was a few hours later. Well, it went during the night because I remember staying up until 4 o'clock in the morning, and I think I made I was in profit of like 0.24 Bitcoin, and it was because the president of China had said something that had made the can. It was like a 40% move, like 7,000 up into 10,000, and obviously I closed my profit. I didn't close it at 0.24. Obviously, me being me and still new to this, I was just thinking we're going to continue going up, and it wasn't until we started going down that I closed. But the main point of this is because my ego wasn't in check. I thought I knew it all, and like the next day, I never changed my leverage. I went long again, took my dog for a walk. I think I was up like $200 again, and it wasn't until I got back home, I'm all euphoric. I think I'm amazing. That I think I was like $650 to $700 loss. Straight away, like within the space of 10 minutes of coming home. That was enough for me to realize that I didn't know enough, that basically I'm gambling basically. Like I was fortunate to make that money, but I took the remainder out. It's been in cold storage ever since, and I've continued to add to it. But it's like it was basically a big wake up call to like say like you don't know as much as what you think.
100%.
So
yes, I completely agree. Yeah, there's I mean, I think a lot of people, like, I think this is like across the board, there's always like this like oscillation of I know exactly what I'm doing, and then you go down, it's like I don't know what I'm doing, I need to really sort myself out. And then there's always that it's like a incline oscillation of I don't know what I'm doing until you reach that point where you're consistent enough, and but you reach the point where you lose that emotional side of things. Obviously, it's a very important thing to do, to lose that emotional side of things, and then you reach that point where you're systematic in your process, and and you can just do it without having that. Obviously, yeah, it's euphoric to get, like you said, euphoric to get that amount of money or that big win. But then it gets to a
Back
point
then,
where
Bitcoin was around $5,000, so it was only like just over $1,000 that I made, you know. So,
but
but
yeah, it was huge
again,
though.
the rest of it was put away. Yeah, back
Yeah,
then it
but
was huge. You know,
exactly.
I thought it was amazing.
Exactly. So, but yeah, I think everyone there'll always be moments for a lot of people getting into it. Whenever that is having that trade where it's like, I'm amazing at this, and then having that, whether it be soon after or whenever, I don't know what I'm doing. But yeah, that is a
Yeah.
very important lesson. I do appreciate you sharing that. So that is all the questions I have. I do have this last one, which is anything else you want to say, anything I've missed or whatever you want to say to people.
Well, we've covered quite a lot, I think,
I
and
think so.
I've probably rambled on a lot
No,
more
it's
than
been
what I
good. It's
thought.
been good.
As someone who was a bit nervous about speaking
No,
on
it's
stream and that, I think that I've
It's done really
spoken
well.
too much.
No. It's been generally good. I mean, I know I ramble on my streams, and sometimes it is about nothing. But this is, even if it has been ramble, it's been worthwhile ramble. And I think this will be a very valuable resource for people who see your what you talk about on either the chat or Telegram. I think not only for people watching now, but for people, you know, retrospectively going to watch this, you know, after the fact. This is going to be a huge thing to watch. So I really, again, thank you so much for coming onto the stream and sharing.
Thank you for having me.
No, thank you. So I think that's about it. I'm going to do the outro now. So thank you guys so much for watching, the people on the other end of the screen. Thank you. If you're new to this channel, do consider subscribing. Scroll down there. There's a Telegram link as well for the list KB mentioned. And KB is also in the Telegram if you want to talk to him or whatever. So thank you guys so much for watching. I will see you on Wednesday. We have another stream with the game. I hopefully have fixed it this time. I know I've said that about 4 times now. Hopefully I've fixed it. So I will see you guys Wednesday. And again, thank you to KB. Shout out to you. Really appreciate it. And that's about it. So thank you. All right. Goodbye.